So here we have the monthly chart going back to the collapse of the bull market in 2007 of the FTSE. So I begin my analysis of the market by starting with the longest possible time frame I can. In fact, incidentally, I might. Here's the longest possible. Right. Here we have. So let me start again. So this then is the FTSE going back to the year 2000. We have the two big bear markets in 2000 to 2002, when the collapse of the tech bubble, and then the 2007 collapse in the market due to the credit crunch. The result of that in the long-term chart is to basically create a large sideways trading range. So let's just quickly establish that by putting trend lines, point-to-point trend lines in the market, establishing the very wide trading range established in the year 2000. There's some bloody lout on a scooter. God, they are the worst sort. So here we have the trading range of the market. I've now discovered how to concertina this market. Thank you very much, Sturdy. So here we have the trading range of the market from the year 2000, the first collapse in 2000, 2002. Let's just put in those two top lines, which will give the upper boundary of the market, of the trading range. So there are those two there. Oops, steady on. And then the bottom boundary is the drawn from the two lows in 2003. Just quickly getting these in. So this is the way I'm on the longest possible time frame. I'm defining the largest possible chart construct. Okay, that's our first point of reference. So we have, the FTSE's been going sideways since the year 2000, and we are up at the top of the trading range in the long-term charts. It's worth noting, I think, to see this market has been in a bull trend since 2009. If I can work this beastly machine, it would make it a lot easier. That's the bull trend since 2009. And establish at 3 points, one here, here, and here. Now we also note in the way that bull trends are derived that are, even though we're at the top of the trading range, there is substantial support beneath the market from this prior high. As we know, markets ratchet themselves better from the support provided by prior high in bull markets and prior highs. We notice the market's already bounced off this once. So we have a wide trading range and then a smaller, tight trading range between these levels up here and down here to contend with. Now our job as chartists is to delve into the entrails of this sideways price action that's been going on throughout 2013. So then we move to the weekly, hoping we don't lose we don't, good. So we still have our horizontals from the long-term chart. We've carried it onto the weekly chart. Now look at this. We have defined the trading range in the weekly chart established from the support from the prior high here and the resistance from the two highs in 2007 and 2002. So the market then has been going sideways, and we have this smaller range here, these two little things. A break of, I think it's fair to say, a break of this level here would have completed a double top. But notice this level wasn't broken, and we've had a rally up. But were it to close beneath there on the week, a small double top would have driven it to the bottom of the thing. But at the moment, we're staying in a tighter range here. If we go to the day chart, what else was revealed from this in this market? Well, the day chart shows the trading range for the last 3 months. It's tightly between 63.53 and the long-term resistance is at just over 67. And that, frankly, for the moment, is that. One more thing we might want to do is to draw in the downtrend that we may have broken today. And the one last thing I would point out, I think, is the resistance from this. This was a small double top, I think it's fair to suggest, which drove the market down to the bottom of the trading range, to this support here, to the prior low here. And this line here may well act as resistance on the way up. So here then we have the short, medium and long-term parameters of the price action in the FTSE. We're bouncing off these prior lows here. The wide range is here. We've broken up through this downtrend. We should find resistance up at here. That's this level, whatever that is. Let's just put it in, 65.30. And there's nothing very dynamic about the situation. It is in a trading range.